Hello again, everybody, for our final section of Chapter 12. This is Section 12.3, and it is entitled Payroll Records. The first payroll record you should be familiar with is the payroll register. This is a form that summarizes information about all of the employees' earnings for a particular pay period. So there'll be a payroll register for this week, and then next week, and then the following week, and the following week, if the business is on a weekly payroll system. If it's every 2 weeks, then you'd see one for this current pay period, and then another one in 2 weeks' time, and another one in 2 weeks' time after that, and so on. Here's what the payroll register looks like, and I'm going to ask, what do you notice? What do you see on here that's of interest to you or catches your attention? Well, perhaps the first thing that should catch your attention is that it structurally is a lot like some of the problems that you've done recently for class. And you'll notice that we have over on the left-hand side, we've listed out all of the employees by name. They are typically in alphabetical order, as well as some background information about their pay, their marital status, their number of allowances, the total hours that they worked this week, because that's important, and their hourly rate. We then have a section that breaks down their earnings into regular and overtime pay, as well as their total, the regular pay plus the overtime pay. We have a section for all of the deductions, a different column for each type of deduction, one for Social Security, one for Medicare, one for federal income tax, and so on. There's even this column that says Other, where we can fill in assorted other withholdings, and you'll notice that for Emily and Garrow, there's a little key here, a little superscript that says letter B. We go down to the bottom, and we see that B is code for U.S. savings bonds, that Emily and Garrow had money withheld for the purchase of U.S. savings bonds on their behalf. Finally, over on the right-hand column, we have over on the right-hand side, we have their net pay. Remember that net pay is their gross pay, this column right here, minus the total of all of their deductions. So that's why Amy's net pay is $198.11. It's the $235.60 that she grossed minus the $37.49 that was withheld for various taxes. And that's again how we get the $198.11. Same method for James, for Emily, for Alicia, and for Garrow. Also, I want you to notice, and this is very important, especially in the context of subsequent content within this course, that every column from regular pay all the way over has a row for their totals, where we'll add up all of the regular pay for all the employees, all the overtime, all the total earnings, so that we have values for all of those. And that's going to be very, very important when it's time to pay out the various deductions to whichever entity receives that money. We have a total for everybody's salary, what is being paid out by your business, and more to the point, in the bottom right corner, that $1,071.29 shows how much is actually being paid out to the employees directly. That's what the sum of what they all have taken home after all of the withholdings. So again, a quick list of the sections of the payroll register. We've talked about the hours worked column and the hourly rate. And by the way, if the employee is not waged, there is no need to discuss how many hours they worked and their hourly rate. It doesn't matter. Those employees would be salaried employees or commissioned employees or piece rate employees or some combination thereof. And the number of hours that they work is not relevant. And so we would skip total hours and rate in those cases and just go straight over to their total earnings. Speaking of which, we do have an earnings section, as we said, a regular column, an overtime column, and the total, the sum of regular and overtime. The deductions are separated out into columns for each type of withholding. Social Security tax, Medicare, federal income tax, state income tax, medical insurance could be in here, union dues could be in here. As we saw with the two employees a moment ago, withholding money for the purpose of purchasing savings bonds could be in here. This could be your retirement, could be any number of things. Finally, we have a net pay column, and it's also useful in the payroll register to note the check number for the live check if a check was issued to the employee as their method of being paid. We'll come back to pay methods shortly. And then across the bottom, as I said, were the category totals. They're important to us now, but they are absolutely necessary in subsequent chapters. We also have, as part of the payroll records, what's called an employee's earnings record. And this, instead of summarizing one employee, every employee's information for one pay period, it covers all the payroll information on one paper for one employee in particular. And so in the case of Roadrunner, there are 5 employees on the payroll register, so we would need 5 earnings records. We would need one for Amy, we would need one for James, one for Emily, one for Alicia, and one for Garrow. Those are the 5 employees that we saw on the payroll register. And again, the difference here, and the difference here is pretty clear. The payroll register lists out every single employee, but it only covers one pay period on the paper. The earnings record, meanwhile, shows only one employee, but it covers all the pay periods, and not all the pay periods forever on one piece of paper. That would be ridiculous. But for 1 quarter or for 1 year, typically it's one accounting period. Here's what the employee's earnings record looks like, and if you're seeing that there's a lot of similarities to the information on the payroll register, you are correct. Many of the columns are identical to what you would find on the payroll register. We would have areas to describe the total earnings, as well as breaking it down between regular and overtime. We have all of the various deductions along with the total of the deductions, and we have a net pay area. But there are a couple of things that are new. For example, we have this column that says accumulated earnings. What the heck could that mean? And along with that, there's a whole lot of information up at the top specific to that employee that is worth having a note of. So again, many of the columns are identical to the payroll register: gross pay, itemized deductions, total deductions, and net pay. Our difference here, you might have noticed, I didn't mention it until now, there was no column, there was no information about how the regular and overtime and total earnings were computed. We just went straight to the idea of here's what they were paid in each category. We've also included a date column to indicate that there was particular entry for the week ending April the 7th, and then the next line covered April the 14th, and then the 21st, and then the 28th, all the way through the month of May and the month of June. And we had at the bottom were quarterly totals. And as I mentioned, we also have this accumulated earnings column that we need to talk about. And accumulated earnings is really just year-to-date gross pay, starting with the first pay period of the year, the calendar year, and we'll just continue to accumulate their earnings as in the following way. We'll take whatever they have accumulated in gross earnings up to this point and add on what they earned in gross earnings this pay period. Accumulated earnings is a running total of the accumulated gross earnings, not the net. There is no column for accumulated net earnings. This is a gross pay column. So for example, if you looked at the last line of Emily's employee's earnings record, you would see that coming into the final week, coming through June the 23rd, she had earned this year $4,178.60, to which we are adding the $243 that she grossed this week. And you add those together for $4,421.60, which, if you refer to the employee's earnings record that I've provided to you and also that I showed earlier in the slides, you will see $4,421.60 is her total gross earnings for the year. So how do employees get paid? They don't necessarily get a payroll check, although that remains the most common way for employees to be paid. What is becoming much more common in recent years, and very soon will surpass the payroll check in popularity, is direct deposit. And with direct deposit, that's where the employer has your bank account information and is able to electronically deposit your pay into your account. There's no need for a physical check to be printed out, distributed to you, and you have to take it to the bank. The third option is what's called a payroll card, and this is basically a debit card. As I said, the payroll check is still the most common method. There are two halves to the payroll check. There's the live check, the part that you would walk into the bank and say, deposit this in my account, or you would say, hey, I'd like to cash this check. And in Emily's case, she can either deposit the $172.35, or she can have that as cash, or she can split it up. The bottom part is, and sometimes this is the top part of the document, but the other half of the document is a pay stub. This is for her records. She doesn't hand this over at the bank. She doesn't hand this back to the employer. This is for her records, telling her that on the pay period ending on June the 30th, she grossed $243. Here are her various deductions for a total of $70.65 that was withheld, and her net pay was $172.35. Direct deposit is when the business electronically deposits the net pay into the employee's bank account. There's no check that's printed. However, a pay stub is generated. It's usually electronic. It's a PDF. You'd log into your employee portal and you'd be able to look at it or print it out if you were so inclined. And the payroll card is the same idea, except that the money has not been deposited into your bank account. It has been deposited onto a debit card that is tied to your name and identity. So, one thing we have not talked about is, why do managers care about payroll? Why is payroll so important? It's important for a whole variety of reasons. One of them is it's a huge expense relative to the other expenses that the business will incur. It's an important expense. Employees are expecting to be paid the correct amount on time. And when any part of that breaks down, the employees naturally get a little upset by that. So it's important, in order to keep your workers happy, to pay them what they are due at the correct time. However, from the more direct standpoint, the manager cares because payroll is a big expense. And it's an expense that management has control over. And so accurate and timely records are very important. The accuracy and the timeliness of your records can help you to determine very quickly whether overtime is justified or if it's a sign of inefficiency. It may be that the business is understaffed and it's necessary for some of the employees to go beyond 40 hours in the work week. Hopefully that's a temporary situation. It could be that the business needs to hire more people, that the short staffing is something that management can control. And it would be a whole lot easier to pay a new person $10 an hour instead of paying your overtime eligible employee $15 an hour, let's say. It also allows the timeliness of the records and the accuracy of the records allow the manager to compare the budgeted amount for payroll versus the actual amount, and yeah, that includes the unexpected overtime that we talked about before, and having those records being accurate and on time. Also allows for the detection of any kind of errors, any kind of mistakes that have been made, or worse yet, there could be some fraud things going on. Perhaps you have perhaps your payroll clerk is not doing a very good job, making mistakes. Perhaps your payroll clerk is doing something nefarious. Perhaps your employees are doing something nefarious and claiming overtime that they did not, or claiming hours, period, that they did not work. So the employer wants to be very concerned, very aware of how the money for payroll is being spent. And that's why employers take such a great effort to make sure that their payroll information is as correct as possible. That's it for today. Thanks for watching. We'll be back next time. Until then, goodbye.